Despite building numbers in the nation's cattle herd, fed cattle and feeder cattle cash prices this fall have exceeded expectations. The live and feeder cattle futures also pushed to new contract high areas the beginning of November, with deferred prices looking very positive for 2018. Michelle Rook reports this is good news for cattle producers after negative margins the last 2 years.
The cattle market has been surprisingly strong this fall, especially for calves, which is bringing some optimism back into the industry. In fact, cow-calf producers say prices for calves are substantially higher than last fall.
Oh, you have calf prices now that are probably 20 to 40, some even instances $50 a hundredweight higher than last year in some of them light cattle.
There were also good profits in the feedlots the first part of 2017.
There was some instances of $500 to $600 head profits, and some of your strict hedgers were maybe down in that $200 to $250.
And the strong feedlot closeouts are driving the demand for calves this fall, in addition to strong packer margins and cheap feed.
The only way to really try to get 3.25 half of this corn is going to have to try to feed it, and that in turn has created quite a bit of demand for these calves.
Packers right now are making about $175 and $185 a head, and that's sure a plus.
The surprise has been the strength of the cattle market in the face of increasing herd numbers, and that's likely the function of strong demand.
Our numbers are higher, according to reports, are higher than they were a year ago, and tonnage is up, but the demand, they seem to be able to sell the products.
So that's leaving many in the industry optimistic about the cattle market ahead.
I'm pretty positive. I hate to be too bullish on things, but I know last year how the spring got. It doesn't mean it's going to get that good again this spring, but it sure feels good.
In South Dakota, I'm Michelle Rook reporting for Ag Week.